With all the attention on the inflation data, which is understandable given the implications for Fed policy, we're actually getting more focused on the growth outlook. With more consensus that we're in the midst of peak inflation in the US, are we also seeing peak growth? Let's break it down. Well, the short answer is yes. With extremely strong growth expected in the second quarter of 2021, we anticipate that the strong pace will continue into the third quarter, but fall as we head into the year end. The real normalization will take place next year when we anticipate real GDP growth to revert to the fourth quarter pace of around 2.3%. So 2021 will be peak growth in the US. Now, lower growth should not be an issue for risk asset markets. As we saw post-global financial crisis, the market is not the economy, and we anticipate that earnings will continue to outpace GDP growth. Our expectation is that monetary policy will continue to be a tailwind to risk asset markets as well. Interestingly, the issue may be with fiscal policy. Assessing developments in Washington, it appears that the odds of a substantial infrastructure package look to be waning. Further, many of the fiscal stimulus measures that were put into place in 2020 and 2021 are set to expire this year, and those have been strong contributing factors to the above-average growth we're seeing today. We've just had incredible tailwinds from aggressive fiscal policy in particular in terms of economic support and monetary policy that has doubtless supported risk asset markets, and I would add the housing market as well. As the fiscal spending from 2020 and 2021 fades, it actually creates a relative headwind. Now, we're going to be watching the needed handoff back to the real economy closely. This issue has actually become one of our investment risk cases, that the private sector fumbles the handoff, and this would ultimately undermine the sustainability of the economic recovery.